Hey everybody, great news. The economy is stabilizing and interest rates, you can now expect them to be 5.5% by next summer. Your housing price is going to shoot up by 10 to 15%.
Are you sure about that?
Like Barbara Corcoran said in 2024. And you know what? You can take your seatbelt completely off because soft landing, it's here.
Let's start with that report out of the New York Fed. It's the freshest and its third quarter read on household debt and credit from this morning. Delinquencies are still below pre-pandemic levels, but get this, they've jumped significantly from the second quarter, going from less than 0.5% to 3%, with a particularly large uptick among borrowers with both student and auto loans.
Credit to the 5-year average. You can see the new transitions into delinquency, big jump on credit cards. Why credit cards? That's interest sensitive.
Sure.
Right? So that's a big thing. Right. A little bit more on autos, kind of close. Mortgages still down below.
I think that we're going to see delinquencies continue to rise. And I think that to a degree that it's a little bit of a normalization of things as things have been historically low recently, especially with credit cards. We're seeing delinquencies rise, especially among subprime folks, along with that debt rising. And what it seems to me is that even though people are generally handling their business pretty well, it just feels like there are a lot of people who are not that far away from really struggling, who may be a job loss or a medical emergency or something like that, away from really having some struggles.
Folks, all of this is crazy talk. So if you're seeing this, you're probably listening to the wrong people, because as you just saw in the past few days, the amount of people defaulting on credit cards and auto loans jumped 600% in a single quarter, folks. So for between the second and third quarter, people are being strangled by their revolving debts, their consumer credit debts, their interest rates are going through the roof. So you're having 28% to 32% range of interest that people have not seen. At the same time, you have the hiatus of student loans, right? All these pandemic era protections. The student loan hiatus just ended September 30, folks. So the reprieve against people's cost is now over. Now, folks, listen to this. This is the real concerning part for real estate, because all this week, you've seen a lot of activity in the actual bond market. You've seen a lot of headlines like, oh, let's watch interest rates. 30-year mortgage rates down from 8% to now 7.45. You know, it's dropped like 0.5%. It had a massive overnight plummet. Folks, listen, that's basically behind the scenes bond market failing to see what's happening, okay? There's a lot of bizarre activity with the stock market. So in this past week, the stock market has a run up, a big rally, and then all of a sudden people are shorting the bonds and things. Folks, this is temporary. The pain in the market, Powell said it himself. He's probably going to say it again today on his next announcement that we do not have price stability. Inflation is sticky. He says it over and over again, and yet many of the issues that we've had in the open market, those ultimate consequences have not been felt yet. So, you know, many of you that have passed through the notion and are fatigued with the idea of watching YouTubers like me and Real Estate Mindset and many others, Nick over on Reventure Consulting, all these folks that have been telling you for a long time there's serious signs of danger in the real estate market. The fatigue factor sets in because you hear about it and then you dismiss it because it's been a long time coming. Well, you got to understand, like, we're not Jerome Powell even. We're not running the central bank. And even the central banker is admitting constantly that he's doing everything he can to lower pricing, and pricing and inflation is so sticky that he himself can't even get his hands around it. When you look at the entire makeup of the economy as it stands right now, you have a situation where people are having on a monthly basis, you are seeing borrowing increasing every month to record high. At the same time, savings aren't there. I've already said this, folks. Now mix in record high delinquency rates. So you have one of the biggest jumps in the amount of people that are now defaulting on auto loans and credit cards are up around 8-9% in default. That is a huge number, folks. Your auto and your credit card defaulting right now is bigger than pre-pandemic. So this is a concern. And now you enter to the next step. Because here's the thing, the fatigued people that are sitting here really kind of dismissed in your own mind that something really big is going to change in housing. You're like, oh, I've heard it. Here it is. It's another video. Well, enter the next headline. Why don't you Google how many times people are searching home equity lines of credit in the marketplace right now? And you're going to find that that amount of time that people are searching to borrow against their house right now is 300% higher. Okay, what does that mean, and why is that super disastrous? Because what's going to happen next is we are seeing a stack of how much people cannot keep their head above water. So the next level game here is that they're going to go ahead and move some of those high interest debts, and they're going to turn their house into an ATM in order to find relief from the defaulting credit. It's either that or file bankruptcy, folks. You're gonna see bankruptcies rise too. But the reality is, when they start rolling that debt into their house, understand this, folks, home equity lines of credit, those are also fluctuating interest rates, okay? So those are volatile, and those can get very dangerous when people cannot pay them. So you're mounting debt right on top. So everybody's like, oh, everybody's got a 3% interest, it's gonna be fine. No, how about you blend the 3% interest against the 12% home equity line, or whatever the rate becomes, okay? okay? Why don't you blend that and tell me what the interest rate is? Why don't you blend that and tell me what happens when we don't have our food bills going down and people can't afford to buy groceries? Are they going to pay the home equity line? Or are they going to go into foreclosure? The reality is this: you have to understand too, mortgage defaults are not there yet, okay? So before you jump in the comments and say, hey, do an update on foreclosure, they're not there yet, okay? Everybody is going to get themselves in hot water, and all of the other areas, and housing will be the last in the chain. But understand, things are accelerating really rapidly. You know, take this neighborhood that I'm walking in, for instance. It's a beautiful Florida day. It's like 79 degrees. In the middle of the day, by the way, it's just beautiful. Clear skies, which means humidity is low. These homes in this neighborhood sold for around $500,000 before the economy, you know, spiked through the pandemic. These homes pushed $1 million price tag most recently, and you're starting to see, you know, a lot of this particular area softening is a popular area, but it's still, you know, homeowners here are just hitting the price reduction button in order to get their home sold. So, you know, it'll be interesting to see what happens. Now, folks, it's undeniable that consumers and the amount of pressure they're experiencing is growing rapidly, okay? Now, in my opinion, you are going to see a lot of this bond activity wear off. So the bond activity that you're seeing where rates are kind of at a moment in time being depressed, you're going to see that the demand for bonds is not there. There's not a lot of buyers. China and all these outside countries that were buying our debt, they're just not into it right now. They're not interested, they're nervous, and you're going to see that as we get through some of these, you know, the bond supply is going to be high, the buyers aren't going to be there, you're going to see the yields tick up higher, and you're going to see the 30-year mortgage rate go higher. So I'm convinced of it. The reality with our bizarre exuberance in the stock, it is so weird how these people go on CNBC all day long from UBS and all these banking houses on Wall Street and just cheer up everybody and say, oh, everything is fine. They have zero concern or feel for what is going on in Wall Street, and clearly either lying to people to keep people's money invested with them, or they're just super separated from really what's going on in real world terms. In Florida, where I'm at, you have to take another piece of this puzzle into consideration, which is super detrimental if you own in our state, which is the chaos surrounding homeowners insurance. If you've seen the news, there's now, and I'm going to do a totally different video on this because you have a variety of topics relating to, did DeSantis do enough? Did he do anything at all? And there's so much hatred for DeSantis, love him or hate him, that, you know, because he's on the right side, meaning, you know, politically, he doesn't get any positive coverage if he tried. So even if he does something valuable, we won't know it. So there's some interesting things I want to cover regarding what's changed in housing, and particularly for our insurance industry coming up, because it is mind-boggling what's going on right now, and that is the average person's paying $6,000 a year to insure their house in Florida, which is insanity, higher than anywhere else. And you gotta understand, that's like 100% jump over recent years, okay? So what people used to spend $2,500 a year on, or $3,000, you know, a year, it's way higher than that now. So keep that in mind. Like, if you qualified for a mortgage and you were really close on your debt ratio, meaning you were barely qualifying, and now all of a sudden your insurance is out through the roof, then your credit card balances go up, your interest rates on all the variable stuff starts climbing through the roof, your student loan hiatus is now over. Oh, and by the way, the cost of everything still sucks, okay? So for everybody that's sitting there with their Pollyanna glasses, you're not listening to what Powell's saying. He's like, I'm raising rates and nothing's happening. I think he's so nervous because there are a lot of hammers falling right now in different segments of the economy that he doesn't want to push it. But he did say, look to early next year, it's coming again. And you got to give Powell credit for anything. He's been consistent. If he says he's going to do something, he's pretty much been on that spot. So, you know, we'll see what happens. But in Florida, you have massive hikes in insurance. Now, by the way, I'll give you a quick anecdote and then I'll leave you with this video. But I had a person call me earlier this year that said, I have to sell my house. And they were frantic. And I said, what is going on? Their insurance with a major named insurance company, if I ever say it on this channel, you'd know who it is, went from $3,500 a year to $14,000 with that same insurance company on a single year adjustment. Didn't creep up. It went that way overnight. And this particular home seller had been with this company for several years, banking policies with them that insurance company invested. Now, everybody's getting all pissed off at the insurance companies, but you gotta understand, the insurance companies get fleeced in Florida because of the way our laws have been. So you had all these, you had a ton of fraud from contractors. The local contractors, by the way, say it's the out-of-state contractors. They're the dirty ones. So the local guys say they have nothing to do with the fraud. And then you have massive attorney loopholes in Florida, which allows them to do whatever they want. And then the insurance companies get milked. You know, we have basically wide open things in our insurance policies that we have to pay for in Florida that, the way I understand it, there's such availability for these things to be taken advantage of that attorneys can make a couple calls and, you know, they get 10, 15,000, 20,000 from their insurance policy, you know, from a party that doesn't really have to prove a whole lot of damage or harm. You know, it's just like free money just sitting there. So apparently, as it were, just on the outside looking at it, you have insurance companies, they're charging more than ever, but most of them still don't make enough money and they leave the marketplace. So it's like, oh, well, you know, the insurance companies are just making a boatload of money with these really high premiums. Well, that's not true. They're charging more just to get by, and a bunch of them won't even charge. They're just leaving. So it can't be good for them. It's obvious. They're not even in the market to play anymore. Couple that with how much money, billions, is going to attorneys and contractors. You know, and everybody's like, well, it's just storms. It's not just storms. There's a lot of other things too. I'm gonna do another video on that, I think this weekend. I'm planning for Sunday, to show you what the craziness is going on in insurance in Florida. Because if you're thinking of buying here, you better face the reality that it is like no place else in that particular arena. That's it for now, folks. Listen, if you have anecdotal evidence of your situation, put it in the comments, okay? Because there's too many people that are running around, they have no idea the insurance is crazy high in Florida, or they get dropped, or they can't get it. Put those, if that's true for you, put it in the comment. If you had an existing insurance carrier that jacked your rates way up, put it in the comments. If you have a situation where life is setting in and you're like, yep, this is going on for me. My interest rates on my credit cards went from here to here to here, or I'm considering getting a home equity, put it in the comments. I want to hear from all of you on what exactly your experience is like in this economy right now. I'm hearing from a lot of you, but I want to put it all in underneath this particular video because I think a lot of people are just clueless about how the other half lives. And it's best if they hear from you and see it down below, okay? Second thing is, if you have any other marketplaces you want me to cover here on this channel in terms of deep dive, winning and losing in Seattle, whatever market it is, I'm gonna throw a few new markets on the menu next week to do a deep dive for data. So if you wanna see how your market's doing, you want data and deep dive in terms of what your market, how it's floating, and is it in trouble, put that in the comments below. I will make a list and I'll work on those next week. That's it for now, folks. Thanks for watching the channel. We'll see you real soon.